Morgan's Jamie Dimon says gold prices could double. JP Morgan's CEO, Jamie Dimon, long known for his skepticism toward gold, has surprised markets by admitting there's now some logic in holding the precious metal, even after its record-breaking rally.
Global market instability has seen the value of gold rise to a record high this week. It is the biggest rally since the 1970s.
Speaking at Fortune's Most Powerful Women Conference in Washington, Dimon said that while he's not a gold buyer, the current environment makes the case for owning it stronger than usual. It costs 4% to own it, he noted, but it could easily go to $5,000 or $10,000 in environments like this. This is one of the few times in my life it's semi-rational to have some in your portfolio. Dimon also warned that asset prices are kind of high across almost everything, hinting that investors may need to rethink their risk exposure as valuations stretch across markets. Other senior JP Morgan strategists have echoed similar caution. In August, David Kelly, chief global strategist at JP Morgan Asset Management, warned that the Federal Reserve's expected rate cuts could fuel renewed inflation. Kelly said that investors should diversify into alternative and international assets, including gold, to shield portfolios from rising prices and a weakening dollar. In his inflation outlook, Kelly predicted that U.S. CPI inflation could rise from 2.8% in July to 3.5% by the fourth quarter of 2025, before easing back to 2.8% by late 2026. He argued that while the Fed's planned rate cuts, a total of 1.25 percentage points over 2 years, may temporarily ease borrowing costs, they could also worsen the long-term fiscal outlook by encouraging higher deficits and eroding investor confidence in the Fed's inflation control. Kelly also highlighted another underappreciated risk: asset price inflation. Over the past 6 years, consumer prices have risen 26%, but home prices are up 51%, and the S&P 500 has climbed 111%, he wrote. Such gains, he warned, have inflated wealth, but also created affordability challenges and asset bubbles that could well end badly. Meanwhile, Grace Peters, JP Morgan's global head of investment strategy, remains bullish on gold's medium-term outlook. In May, she said the bank's price target for gold had already surpassed $3,500 and could climb north of $4,000 over the next 12 months. She cited continued demand from emerging market central banks and resilient jewelry and tech sectors as key drivers. The backdrop of positive growth, moderate rate cuts, and diversification needs makes gold an attractive asset, Peters said. With top voices at JP Morgan aligning on the benefits of diversification and inflation protection, even the bank's biggest gold skeptic now concedes that holding the metal, once dismissed as a relic, might be one of the smartest defensive moves in today's uncertain markets.